All right, what's going on, everybody? So I'm gonna be pretty much breaking down how I am catching so far this GBPJPY move. Let me grab my phone really quick so I can get exactly where I entered price, so I can mark it off on the chart really quick. So I did enter all based off of the 30-minute time frame. So my first entry is right here, I believe, at 143,550. I did take drawdown on this first entry, 550. So my first entry was around here. Stop loss is at daily resistance. And take profit is all the way down here. Right? All the way down here. And then my second entry is at 143,275. So this entry I actually didn't take any drawdown. It's 143,275, which is around here. Like, it was around here in the same stop loss area and same take profit area. All right, so I'm going to be breaking this down really quickly. So every time you analyze the market, you kind of want to start off on almost the highest time frame. So I always like to start off on the weekly. The weekly normally is almost kind of like a quick look just to see what's going on. So as you can see, previously we did have the cross of moving averages being red over blue here, indicating more bearish momentum, right, overall, right? So now, as you can see, we are approaching this weekly support weekly key level, right? So normally the weekly to me is just a quick look along with the monthly. Now going down to the daily, right? When the daily was forming, right? Obviously this bearish candle wasn't happening already, right? The point is to kind of catch this move. Okay, so first of all, let's keep one thing in mind. As you can see, the market's kind of forming downtrend structures, forming lower lows and lower highs. So this being a previous lower high point. Obviously this low isn't lower than this low, but this is a lower high point, right? So then this would be our first lower low. So then point A, point B, right? Bearish candle wick, bearish candle wick, right? As you can see, at this point in time, this was actually a gap in the market. So I had actually kind of filled that gap up with a little orange zone here, indicating that there was missing price action, right? Now, once the market actually started forming this bullish candle here, I was actually waiting for a reversal on the lower time frames because we were approaching this monthly or this daily support and resistance level. As you can see, here we have support here formed a little bit of a resistance, which would be a little indecision, and support again. So I was kind of waiting to see if the market would reject this area. So now going down to the 4-hour time frame, which is the time frame that actually helped me catch this move. Of course, the 4-hour time frame was actually uptrending, right? But this is what I'm talking about when every time frame has its own market structure. You want to be looking at market structure in all time frames. So just because the 4-hour time frame broke market structure doesn't mean that the daily time frame actually completely reversed, right? So looking at the daily time frame as well, we are maintaining this downtrend structure, and we are maintaining blue or red over blue moving averages, telling that there's more bearish momentum in the market overall. So now, once the market actually came to this previous area and started forming this much exhaustion, momentum was already dying off. So I was kind of waiting for a reversal pattern there. As you can see, we are also close to that 61.80, and we're right at that area of resistance, which is the daily resistance, which we are gapping, as you can see. So now, for me to maintain my order, right, I'm going to go over my entries right now. So you can see we have a cross moving averages again, and I've been in this order for a minute, and I'm actually going to hold this order over the weekend because I do see potential for the market to actually push down to my initial take profit area, even though I can close this trade with a pretty decent ROI, right? So now looking at the 4-hour time frames, you can see the market kind of formed all of this buyer's exhaustion, right? Momentum was dying off, and then formed this bearish engulfing. So at that point in time, that's when I went down to the hour time frame. And once I reached the hour time frame, I wasn't seeing too much detail, right? We did see this double top, but initially it did break this previous neckline. It did break this previous neckline here. It's this bearish candlestick formed under, but then this bullish candlestick closed back over this area of support, right? This is why we want to be using our random line. So I'm actually going to get rid of the fibs here because we know we're at a 61.80. So you see it kind of closed over this area of support. So then that's when you kind of want to draw it out completely. Right, so then at that point in time, I wasn't seeing too much detail, so that's when I went on the 30-minute time frame, right? And on the 30-minute time frame, I kind of saw this candlestick here, right? And I entered when this candlestick was forming because it did seem like there was going to be a lot of bearish momentum, and it did seem like it was going to push down at that point in time. But as you can see, my stop loss was here, and this is why you have to stick to your stop losses, because if I would have closed out based out of emotion, saying, oh yeah, it's the market's overall uptrending on the 4-hour time frame, I'm just going to get stopped out, I'm going to close early, I would have completely missed out on this entire push here. So you really want to stick to your stop losses. Your stop losses also need to be above market structure or under market structure. So in this case, I'm waiting for the market to actually go bearish, so it's going to be above market structure, right? So let's say on an uptrend, right, then the case would be that your stop loss would be under market structure. Let's say I'm waiting for the market to go bullish here, right? My stop loss would be way under market structure. So now, going back to here, all right, pretty much it came back to its resistance. Of course, you want to be drawing your random lines based off the wicks, right? Most wick touches. So I'm going to put it right here. As you can see, this wick, this wick, this wick, this wick, and this wick do touch this area of resistance, right? So at this point in time, I definitely could have entered another order when it came up to here, but I decided I'm just going to hold it because I'm already in some decent drawdown. I'm already in drawdown like 30, 40 pips, so I'm just going to hold the order. That's the thing about GJ. I don't really use too crazy lot size on GJ, especially when I'm waiting for like a trend reversal like this, right? I'm kind of using, I'm being a little more conservative. So initially, once the market actually did push down and break this support right here, right, it came back up, and it seemed to me as if it was retesting that area. So kind of when we had this variation pattern here, I did end up entering another order, which I kind of should have waited. I really didn't like this entry. I kind of should have waited, but it did go in drawdown for a little bit, then went in my direction yet again. So now it's really all about holding the order. Now, if we can get a nice close, right, it being Friday, if this candlestick could close bearish engulfing like this, then definitely I do see the market pushing down even lower, probably to this area of support down here, right? Or even possibly the extension level being the negative 27, which would be, getting confluence with this area of support and this weekly key level. So, definitely risk to reward is there for risking about 50 pips for about a 220 to a 350 pip reward. Definitely was there. The return on investment is there so far. So I'm going to be holding this position over the weekend most likely. I do expect it to pull back now and continue going back down, as this is a 61.80. So I'm just going to hold that out. I'm going to move my stop loss to break even here pretty soon, and hopefully you did benefit a little bit off of this video. I'm also going to be breaking down UJ2 as well in the next breakdown video, but I will be talking to you guys then.